Good afternoon. Can everyone on YouTube hear us? How's everybody doing today? All right, we're getting some people watching. How's everybody doing today? This is Michael Camo from T3 Live. I'm here with Jeff Cooper of the Daily Market Report. We're going to be getting going in just a couple minutes. How's everybody doing out there? All right, everybody. Mhm. All right. Are we live on Facebook? How's everybody doing out there? What's up, Eric? What's up, Max from Canada? This is Michael Camo with T3 Live. I'm here with Jeff Cooper. Jeff, how you doing today?
Good morning, everybody. I'm doing great. How are you?
Okay, weird. Okay, so before we get started, we're going to go through the legal disclaimer. As you probably know, this material is for informational and educational purposes only. Um, you are fully responsible for any investment or trading decisions you make. So I think everybody knows that. Steve says hi to Jeff. Hi, Steve. How you doing? We're live on Facebook. We're live on YouTube. So a little bit about Jeff. Jeff is the author of T3 Live's Daily Market Report. He's been a successful trader since 1981. He started out trading for Drexel Burnham, which was one of the giant investment banks and a hedge fund. He went independent in 1986, and he is legendary for his unique hit-and-run trading and technical analysis method, which is used by thousands of traders all across the world. And Jeff is he's the author of the best-selling hit and run trading books. We're going to talk a little bit about those books later on. This has basically been read by every serious trader in the past 20 or 30 years. You go to somebody's house as a trader, one of these books will be on their shelves. He was one of the revolutionaries for trader trading, especially in online trading. And as trading went to the internet, he's also done video training courses. And we're going to tell you how you can actually get one of these books for an incredible price later on. So please stick around. We are going to make you an awesome offer. So Jeff, why don't you tell everybody a little bit about yourself and your philosophy with trading?
Well, good morning, everybody. First of all, I hope you're having a great trading day. It's been a great morning for the Daily Market Report. Last night on our report, the nightly stock report, we had FMI short. We bought OKTA yesterday and sold it into the earnings spike this morning. We were triggered long in SSTI this morning, and as well as a swing trade on HEAR. So it's been a good morning for us, despite the red tape. So what I like to do is start off right away looking at some textbook setups, and then you'll get a feel for some of the techniques I use and some of the concepts. So the first chart we've got here is
Jeff, make sure you're sharing your screen. Click on the green arrow, the icon with the arrow on the top left.
Let's see, on the top left. I don't have a. I don't see that, Mike.
All right, hang on 1 second. Okay. All right, folks, so we're having a little bit of a technical difficulty. We're going to get going in just a second. We're going to get Jeff's problem straightened out. In the meantime, does anybody have any questions? Okay, so Jeff, what else are you trading today? What else are you looking at?
Well, a lot of the leaders are getting hit. A lot of these pole dancing thin stocks, the riskier small cap stocks that we've been trading, like NEWR, EOLS, IQ, which is basically same format as Netflix in China. So a lot of profit taking is getting hit. A lot of stocks are getting hit on profit taking going into next week's option expiration. So I think maybe the premium in the calls was plumped up and low-lying fruit for the ARBs, and these stocks are getting attacked today. Facebook is down over 3 points. Yesterday we sent notes out on two big leaders that seem to be holding hands on the way up, like Sundance and Butch Cassidy, and that Shop and W. And we looked for them to tag their 165 and 105 respective strikes. And they were both down 4 and 5 points and are bouncing a little now. So I think basically the market can correct into next Friday's Triple Witch option expiration.
Oh, okay, Jeff, looks like your charts are up, so let's get to the setup so people can see what you really do.
Okay. So the first chart we've got here is WHD, which is a in the oil patch. And we sent an intraday alert to buy WHD on a swing on Tuesday as it stabilized on a back test here at its 50-day moving average. This was in league with the check back to the prior breakout point right here. The presumption was WHD would leave a 1, 2, 3 pullback lizard buy setup. And I'm going to walk through what that is. You can see that this is a 1, 2, 3 pullback, but it is also the first time that WHD turned its 3-day chart down since the breakout. The 3-day chart simply turns down when you get 3 consecutive daily lower lows. You can see on this decline to the 20-day moving average that although it was a 1, 2, 3 pullback, you did not have 3 consecutive lower daily lows. It was a lizard buy setup as well, because the day we bought it on Tuesday, you had an open and a close near the top of the range after it pulled back and it tailed back up to close near the open. So basically, you've got these 2 little open and closing limbs up here and the long tail, which is why it's called the lizard setup. And the reason I use these kind of catchy names is because in the heat of the battle, I don't have time to think about it. I want muscle memory to come in to remind me what we're thinking about. So these names they serve a purpose and they're helpful. So we had this new 10-day low. The lizard is not just an ordinary bottoming tail. It's a bottoming tail from a new 10-day low. And you want to see the close near the top 25% of the day's range. Additionally, as we said, WHD had turned its 3-day chart down for the first time since the breakout. So as you will see with most of my setups and strategies, it's a matter of putting pieces together. When there are multiple factors lining up, the risk to reward is in your favor. These are what I call whites of your eyes trades. We have to be on guard against taking trades for the sake of of action. Sometimes the hardest thing to do is nothing. Trading is not just about trading. It's about watching, sitting on your hands. Speculation is observation. That's what subscribers pay me for. That's what they get with me. I'm in my turret every day, all day, watching and observing, and I'm looking for the telltale signs or relative strength. That's the best indicator, I think, that's out there. Green beans in a sea of red, or red beans in a sea of green. When a stock is shrugging off the market tape, good or bad, that will reveal signs of accumulation or distribution. At the end of the day, that's what we're doing, looking for patterns of accumulation and distribution, irregardless of what the economic backdrop is, the news backdrop of the day. As Yogi Berra is famous for saying, you can observe a lot just by watching. So stocks have their own personalities, and the only way you can learn them is by observing them day in and day out. And that's what I get paid to do by subscribers. Let's take a look at the next strategy. The next stock I want to put up is IRTC, which is basically a new stock for me. I hadn't seen it until May. And this is iRhythm Technologies. So Monday night's report had a long setup for IRTC. This is Monday's close here. Monday's bar here.
Jeff, when you say Monday's report, like, what do you, just so for people that are new, what do you mean by Monday's report?
Okay, well, we put out a nightly stock report every evening that has day trade setups as well as swing trade setups, long and short day trades, long and short swing trades. And that's in addition to a morning commentary on the overall backdrop and tone of the market that comes out every morning. So on the report for Monday night, the stock report, IRT, had a long setup. This was a 180 runaway. It's not just normal 180. By 180, I mean the stock closes at the prior day's lows. Right here, you can see it closed at near session lows. The next day, IRTC closes at near session highs. But it's in a runaway move. So the idea of immediate continuation is embedded in the pattern. It's also what I call a peekaboo or veiled new closing highs. So you can see it's not a higher high. It hasn't really broken out with any authority out of this little flag pattern, but it's a new closing high. So this gets flagged by many traders and many screens, and they're ready to pounce the next morning, typically. So we were triggered long on the trade, on trade through entry. By trade through entry, I mean at least 10 to 15 cents above the prior day's high. And that triggered right from the get-go. We sold half on Tuesday at 79, I think it was 79.60, 79.70. The next day, right away, it ran up. And as in keeping with our methodology, we sell half, we sell a piece, and then trail a protective stop. Trim and trail is one of the underlying concepts of our swing method. We sold the second piece at 73.95 on Wednesday, locking in a 375 gain. Why did we sell the balance on Wednesday? Markets and stocks often play out in threes. You have your triple tops, triple bottoms, head and shoulders, etc., etc. W.D. Gann had a rule: never buy on the third day of a strong move. So that's why we sold on the third day. It's easy to see a setup, a long setup. It's easy to get, or a sell setup. It's easy to get into trouble. Getting out is an art unto itself. So we rely upon and stand on the shoulders of a lot of the greats like W.D. Gann and Jesse Livermore to cull that art of knowing when to get out, because there's nothing more frustrating than seeing a profit go to a loss. Earlier, I said that stocks have their own personalities, and that personality keeps getting expressed in the same way as similar patterns repeat, whether this is something innate in the natural structure of the stock, or whether it's a reflection of the same group of traders that trade that name. Who knows? But it happens. They have their own personality, and you can see with IRTC, you have a bull flag here, pops out of it. Another bull flag pops out of it, a bull flag, and it pops out of it. So this expresses the underlying nature of stocks to expand, contract, expand, contract. They're breathing. So once the volatility or the range expands, they can walk off that expansion in time or price, either by going sideways or by pulling back. And a strongly bid stock and a stock like IRT that's been under strong accumulation, usually you see them walk off that initial impulse, that expansion, by going sideways rather than a deep pullback or shakeout. But it can play out in either way, and that's relevant to the again, the personality of the stock. So the only other thing I wanted to point out is that this expansion and range that you see, these impulse bars, they relate to not just directionally as to the um, uh, the signal of the stock, the trend of the stock, but also the expansion is as to the range of the day. So you've got this expansion going on in the size of the bars and in the direction and directionally. Let's take a look at another setup. And that's going to be FCFS, First Cash Financial. So FCFS was a long on the nightly stock report for May 20th. Right back here, it was a holy grail pullback buy setup on a 180. I don't think I have this the right date here. I'm sorry, we're over here May 20th. Okay, so this was a holy grail buy setup. A holy grail is simply a pullback and a strongly trending name to its rising 20-day moving average. And it's called a holy grail because so many traders follow it, and because of its efficacy in defining continuation patterns, stocks and strong trends, pullback, and often the 20-day moving average marks and defines a point of continuation. And it's also a 180 buy setup, as we talked about in the prior example. Here you can see on this slight undercut of the 20-day moving average, FCFS closes at near session lows, and then it closes at near session highs for the 180 holy grail buy setup. And in my experience, and for those of you who've been the subscribers, you'll know that when you have multiple setups, it puts the odds in your favor for a successful follow through. So this trim and trail strategy that I talk about, we sold a piece of SCFS as it rallied up and trailed a protective stop. At the same time, this is in the art of selling. You want to give a position leash to run, obviously. So that's why but you also you don't want to give back profit. So selling half of the position as it moves nicely in our favor, and then trailing the protective stop on the balance, it protects emotional capital as well as financial capital. Let's take a look at another setup that we were in recently, NEWR. New relic. So New Relic was a long setup from the nightly stock report on May 17th, right in here. And it was based again on multiple setups. And that's an LROD, which is simply a large range outside up day. And it was a 180. Again, you see this close at near session lows followed by the close at near session highs. And it was also a peekaboo new closing high. You see, it was not a new intraday closing, a new intraday high, but in fact, it was a new closing high. Notice that this combo setup was within the structure of a mini cup and handle, a very small cup and handle. You can see the left side of the cup, the right side, and then this little 2-day handle. So we sold, we entered from the get-go on May 18th, right here on the open at 91.70, and sold half as it moved up to 93.77. We sold the balance the next day at 93, I think it was around 93.70, 93.80, and it was a good thing as NEWR pulled back near our original entry. However, we should have reloaded. It was okay to sell. It was the right move, but we should have reloaded on 523 right in here as NEWR left a continuation signal, another 180 buy signal, and we missed it. This was coupled with our proprietary +1 -2 pattern. Well, I shouldn't say it's proprietary because I'm going to explain what it is, and everybody who takes the report knows what it is. But it's a strategy that I created based on a lot of W.D. Gant's work. And simply put, the +1 -2 strategy is one of the anchors of my methodology. It was created subsequent to writing the hit and run trading book. So I'm always evolving, and that's what you want to do as a trader. You always want to learn new things and evolve and adapt. So the +1 -2 strategy occurs when the 3-day chart is pointing up. 3-day chart is pointing up anytime you have 3 consecutive higher daily highs. Obviously, the 3-day chart is pointing up here. The methodology or the buy setup is satisfied when the 3-day chart is pointing up. You get 2 consecutive lower daily lows. Here's your first daily low, your second daily low, and you don't get immediate follow through. As traders, we're all looking for immediate gratification, but you get what I call tennis. You get this stutter stepping back and forth here, but on the 3rd day, it doesn't do anything wrong. And if good price comes to patience, as the old bromide is, on the 3rd day, NEWR lifts out here and it goes to a runaway move. And we missed this move. So often what I like to do is print out not so much the winners, but the missed opportunities and the losers, because I find that that's where I learn the most. So look what the stock did since that tennis or stutter stepping. Interestingly, exiting was a good thing to do as it never pulled back past our original entry, but we should have reloaded. The next 3 setups I want to walk through were not official setups, but they were highlighted several times over the last week in our morning report. They do a good job of showing the power of my strategies. No matter how some traders get upset about the algomatics and how program trading has changed everything, and they have changed a lot, but in that they create more intraday noise. But the same patterns I created in the mid-1990s in the hit and run trading books, I guarantee you they're still working today. I'm still making a living a week in and week out with them. So let's take a look at this next strategy I want to show you, and that is Shopify. So first up here in these next strategies is SHOP, and I want to look at the period from March to the present. And this is a good example of showing a multitude of our strategies. On March 20th, SHOP left an expansion breakout. That's right here. It's an expansion breakout buy signal. That is simply the largest range in the last 60 days to a new 60-day high. However, there was no follow-through. Follow-through is always key. When SHOP knifed back below the breakout day, right here, it caught traders wrong-footed, and it was talking. False moves lead to fast moves, and this certainly was the case with SHOP, as it waterfalled from 154 up here down to around 112. I'm sorry, down to around 144. I'm sorry, this is not 154. I was thinking of this comes from it waterfalls from over 200 down to 150-ish, 145-ish, and so that's a 50-point decline. Notice how the flush of the 50 right here led to a test of the 200-day moving average. So we take into account within the framework of our setups the widely watched moving averages, the 50 and 200-day moving averages. On 420, SHOP left an expansion pivot buy signal. That's right here. On April 20th, that's the, I'm sorry, this is right here, an expansion pivot buy signal. An expansion pivot is a move either way through the 50-day moving average on the largest range in the last 10 sessions. And price range precedes price. So when you see these large ranges like this, it's typically an indication of accumulation. So here also is your first expansion pivot. This is the largest range in 10 days through the 50-day moving average. There was no follow-through. SHOP checked back to its 20-day moving average, and it looked like a failure. But as I like to say, often the first mouse gets the squeeze, while the second mouse gets the cheese. So this is a bigger picture example of what I like to call tennis, this stutter stepping before the ultimate move plays out. On 521, right here, SHOP left right as it went up and tested this prior breakdown level. SHOP left a signal reversal bar. It left a Gilligan sell signal, and that is simply a gap up to a new 60-day high with a close at near session lows. This is a strategy I created that does a good job of identifying exhaustions, either at bottoms, which is a gap down to a new 60-day low with a close at near session highs, or a Gilligan sell, as was the case here. And you did get a little follow through. However, it didn't do anything wrong. It pulled back ultimately to its 20-day moving average for a possible holy grail buy signal. And when this gap here, which when this was offset, you get a multiple buy signal here. And what is that? When you get gaps that are offset, I call those eclipses, and you get a rule of 4 breakout right here. And that is simply a breakout over little triple tops. In this case, they were tight triple tops. You have the first high, second high, and third high, and the gap is offset in the tandem, in league, with this push over little triple tops, and you get an extension. Pulling back the lens, these strategies, these setups don't exist in a vacuum. Always I want to look and see within the context of the structure. And what is the structure? This is all playing out within the context of a cup and handle. This whole big tennis pattern here is the handle. And it's defined by this pullback and set up by this pullback into the 20-day moving average. The next stock we're going to look at is W. We've just got a couple more to go here before we'll take some questions. Let's see. Looking for Wayfair. And of course, it's at the bottom. Okay. On May 1st, right here, W left multiple buy signals, a combo soup Nazi, and I'm going to explain what that is, and then island bottom setup. A soup Nazi is simply a break to a new 20-day low that doesn't see follow through and instead immediately knifes up through the prior low. So essentially, it's a little bear trap. There are many traders that buy new 20-day highs and short new 20-day lows. But when they don't get follow through, they're souped, they're cooked. So this is basically a little bear trap setup. You break down below these lows, you knife back up through it, and the next day, the hook is in. It gaps up through this open gap on a large range day through the 50-day. What is that? An expansion pivot buy signal. So the point of recognition of this bear trap came to fruition on May 2nd when W exploded through its 50-day, electing this expansion pivot buy signal. The next day was a relatively narrow range day. Often after these initial impulses, you get what I call a TNT, or a thrust, a noise, or a narrow range day, and then an immediate continuation. Institutions have all the patience in the world. They don't need it. Sometimes they chase, but they don't need to. So when they've done their buying and the stock doesn't come back in, they'll let it saute a little bit. And then if they've got an agenda and they want to own it, they'll come right back to it when it doesn't come in. And that's what played out in W. And again, look at the pattern that's set up. The bigger context is another cup and handle. And what do you have here? The 3-day chart is pointing up, and you get 2 consecutive lower daily lows, satisfying our +1, -2 buy setup. Tennis day here, stutter step, no real inclination either way, but the die is cast, the writing is on the wall. The next day, when you get this expansion breakout, new 60-day high on the greatest range in 10 days, and combined with a pivot out of this cup and handle and a runaway move. Interestingly, notice that when you get these little train tracks here, straight up day, straight down day, you get no follow through. Remember, follow through is key. So there's no reason to get short if you think it's going to pull back and check back to the breakout point or even the 20-day moving average, which could have happened. You don't get trade through entry. There's no trade below below this day's lows. And if they're not going down, often they're going up. And when you get to trade through this is a little lizard sell signal, a new 10-day high with the open and close near session lows. When it's offset, there's a real squeeze on, and this may be all part and parcel of this, what we talked about yesterday in a few notes and in our report, of a squeeze to the 105 strike. So you can see that once, with the option expiration coming up, once W got through the 100 strike, it screamed to the 105 strike. And the opposite is playing out today, and you've already got an outside down day back to par. And I think we just have a actually that's there are a couple. Let me take a look at a couple. Yesterday we sent an alert to go long OKTA. There's another new name to me that just came on my radar about 10 days ago. So why did we put the buy on midday yesterday? It's in a runaway move, and you have the first 1, 2, 3 pullback, which turns the 3-day chart down, combined with a test of the 20-day for a 1, 2, 3 pullback, holy grail buy setup. I could have waited till today, but we knew that earnings were coming, which they did this morning. And the setup suggested that the risk to reward was in favor of a spike. So we put out a note to sell half in keeping with our methodology on the opening spike. And when it tagged 60, I don't even know if there are any options on it, but I assumed that this was a natural, round number resistance on the spike up through the prior highs. We sold the second piece. And there was... oh yeah, there's another setup that this is a good example of showing this idea of expansion and contraction of how stocks breathe. Ever heard of this stock till about 10 days ago? Shot spotter. But we used it last night. Why? SSTI undercut its 50-day moving average, reclaimed it with authority early this week, and yesterday it left at TNT, a narrow range pause day. So you have this thrust, the noise day, the pause day, and it gapped up despite the market pulling back immediately. It gapped up and stayed up. This was a swing setup on yesterday's report, last night's report. So we sold half, and then we trail our stop, which is a break even. So that does it for the setups that I wanted to walk through today, and I think that gives a lot of color to the types of concepts that underpin our strategy, which is basically once you can define the trend using the 3-day chart and the 3-week chart, which backstop that +1, -2 daily or weekly buy setup. Once you can identify the trend, then we're looking for continuation patterns. We want to buy strong stocks as they go into a crouch. And conversely, when the stocks are in a strong downtrend, we're looking to sell weak stocks when they try to stand on their tiptoes. And with that, I'll hand it back to you, Mike.
Okay, Jeff, thanks a lot. I'm going to share my screen. Everybody see my screen? Can you guys on Facebook give me a like if you can see my screen? Yeah. There, just hop in. Okay, so we have a very, very cool offer for you guys today. Jeff just updated his hit and run strategies for 2018 and beyond. As you can probably tell, he's an idea machine. He issues at least 20 trades per week. That's putting it conservatively. It's more like 40. And you can also see by the names he just talked about that he has a real knack for picking stocks you're never going to hear about in the Wall Street Journal. You're never going to hear about on TV. And now just be patient because the offer has a very low price, but you get a lot of stuff. So please listen carefully. Okay, so the first thing is his hardcover book, Hit and Run Trading, This book is it's worth over $50. I'm actually going to share my screen so you can see what it actually looks like. Yeah, so this is what the book actually looks like. It's actually a real hardcover book. It's not an ebook. This is not a PDF. It's a real hardcover book with tons and tons of actionable strategies. And again, like, there's some versions of this that are actually over $100, but like, let's just call it 50. I'm going to share my screen again. Okay, so you know that $50 book. Then there's the Daily Market Report newsletter. Jeff talked about some of this stuff. You get the morning report with Jeff's macro outlook, the nightly stock report with actionable ideas for the next day. So you're always going to have minimum 3 to 6 ideas, day trade ideas, swing trade ideas, long, short. So it's everything. You're going to get intraday alerts, even more opportunities, more analysis. Overall, again, a minimum of 20 trade ideas per week. More like 40 plus, and that's worth $129 per month. Our offer, it's not even close to $129. So please pay attention. So this is what the morning report looks like, just so you know. It's kind of Jeff's deep dive in the market, where he's covering like the SPX, the NASDAQ, the Russell 2000, gold, oil, things like that. Intraday alerts. When there's an opportunity, there's an update. Jeff puts out an update, so you'll always know what to do. There's never any times where you're like, what should I do now? If it's time to sell, it's time to buy, you're going to get an alert. Then here's what the nightly stock report looks like. This is just the top of it. Just want to give you guys like a quick overview. Again, 3 to 6 ideas for the next day, plus updates on Jeff's swing trades and his personal watch list. So like this one is Monday, talking about myocardia, Weibo. So again, these are not like the everyday boring stocks. These are exciting, like momentum stocks that really move. Then also, you're going to get a video course. So this is the hit and run methodology. It's updated for today's markets, all new video course. It's over 2 hours of training. It has 20 actionable setups, 10 buy and 10 sell. So you can spot reversals, extensions, and momentum in all types of markets. Again, it's over 2 hours of training, 20 setups. So it's like all actionable stuff. It's awesome. So again, you're going to piggyback the institutions as they push momentum stocks up. You can short when big mutual funds clear the decks. You can get long hot momentum stocks when they take a break. And there's 17 other strategies that work today. And again, everything is taught with clear, simple instructions. So we just happen to have an expansion range breakout on the screen. So this is what it looks like. So everything is super specific and super simple. So the deal is pretty crazy. As I showed you, book is worth $50, $129 for the newsletter, and the video course is $195 for a total value of $374. But you get in today, it's just $47.50. You get everything. And the way it works is the newsletter will renew at $129 per month after 30 days. You don't have to stay on if you don't want to. We're willing to bet you're going to stay on. But again, it's just $47.50. And you get all this stuff. $50 book, $129 newsletter, and a $195 course. Everything is $47.50. If you want to take it, go to t3live.com/deal. And it will pop right up. I'm just going to show you very quickly, and then I'm going to show you some other cool stuff. So just go to t3live.com/deal. All you got to do is wait 1 second. It'll bring you here. You don't need a coupon code. You don't need anything else. Just scroll down. You can see all the discounts are already entered. Just put in your information, and you'll start getting email alerts this afternoon. You'll get the nightly stock report tonight. You'll get instant access to the video course. So basically, you're going to get everything right away. Now, let me show you just a couple other cool things. Now, the reason this deal is so cool is you can get the hit and run book for about $53 on Amazon. There's some other weird versions on eBay that are like 70 or 100 or whatever, but we'll just say it's about $53 on Amazon, as you can see on the screen. And again, this deal is $47.50. You get the newsletter, you get the video course, and you get the book, and you keep it. And again, there's another video course out there, the new swing chart method. It's $495. We include a video course in this $47.50 deal. So again, go to t3live.com/deal, and you can get the offer. And it includes everything. Again, very quickly again, $50 book, $129 for 30 days of the newsletter, and a $195 video course, and you get everything for $47.50. So you save $326.50. And so these are just some comments from Jeff subscribers. These are all unedited. These are all messages that we've gotten. For example, like using Jeff's, to show you like how people are using it. Using Jeff's technical analysis methods, I recently purchased puts on Mike for $250 and sold at $4,500 when it gapped down by more than $20 per share. Jose from Miami says most of my trades make money. Deb from Kansas City, one trade a week pays for the monthly trading fee. Roy from Montreal, it can pay for itself quickly. And Luba, I bought NVIDIA puts that paid off very well. Again, greatest value addition to my personal trading profits are the intraday alerts for buys and sells. These are typically my best trades and where I make most of my profits from the subscription. Tom J says, I have followed Jeff for 20 years. Enough said. And that's a really interesting thing. Jeff has we've had a lot of customers with Jeff who read his books in the 90s and have been a newsletter subscriber for 10, 15, 20 years. Matthew from Illinois says, Jeff has kept me on the right side of the markets, and I've avoided many market meltdowns over the years as a result. Coy from Miami says, I like the fact that it's so accurate, which is a pretty nice, simple way to say it. Robert from Chicago, when I get an email from Jeff, I need to pay attention to my positions in the markets, and the key is that the timing is usually right. Shauna C. from Florida, since I've subscribed to Jeff, I've made more money in the last year than I've made in the last 5 years on my own. And then my favorite, Joshua J., made some real moolah. PH, RHT, EOG, LFUS, RGR. Again, stocks that nobody's talking about, because 99% of people are talking about Amazon and Google and Facebook and all that stuff. But Jeff is always all over all these sort of wacky, volatile mid-cap names that are move all over the place and really give you opportunity. Tony S. from Hawaii, I especially like the accuracy of his calls. And finally, Rodrigo, with small positions, the subscription has already been paid off. Great stuff. And again, go to t3live.com/deal and you can sign up. We are going to open up for questions. So I guess so. All right, first question is going to come from me, and I'm going to ask you, Jeff, how do you develop your like hit list, your universe of stocks? Because, I mean, like I said, a lot of these stocks are off the radar. Most people don't know about them. So where do they come from? How do you pick them up?
Basically, every weekend I'm looking for stocks that are making new highs, and the key is not just to buy them because they're at new highs, but to stalk them. And one of my favorite sayings about the market is that speculation is observation, and the trading is not always about trading. That means you want to be watching them and stalking them. Sometimes trading isn't about trading. It's by sitting on your hands and waiting for the whites of their eyes, waiting until these strong stocks walk off overbought conditions, or in a runaway move when the market has been breaking out, like the Russell and NDX of doing. Chasing it can be a dangerous thing, but in late stage breakouts, that's where the quickest moves and the most money can be made in the shortest amount of time, as long as you know that you're playing with fire.
So about how many names would you say you're watching at any given time?
Well, what I do is I create a hit list on the weekend of about 12 strongly uptrending names. Some of them are runaway names, and 10 to 12 downtrending names. And I have within that scope, I have a monitor with about 60 names on it at every given time. And so I'm closely watching the hit list and looking at the larger universe of 60 names or so to get a flavor of what, what's going on in the tape. And that's what I'm doing day in and day out, looking for looking for false breakouts like we had on Grub and SFLY yesterday. We sound alert. We're tempted to take Grub as a long, but thought twice about it, and sure enough, it gave up the ghost and came all the way back in. And little things like that, when you see leaders that have been consolidating that break out and then falter, that's sometimes a canary that that the market itself is going to have a hiccup.
Okay, here's a good question from YouTube. And guys, like, now's the time to get in your questions because we expect to get a lot. So are your stops hard stops or mental stops?
They're mental stops. And the most important thing to do once I buy something is to know where I'm wrong. In other words, to have a stop in, but I don't put them on the books. As I say, I'm at my chart every day, so I'm using mental stops. The worst thing you can do is to say, well, I'm going to watch it when it gets down to my stop, and I'm going to see how it behaves. That's just a prescription for, giving up more, giving up larger gains, or in the case of no gains, of creating deeper losses. So once I create a mental stop, then I put a sale pay stop when I violate my rules, which happens. We're all human. And that's my uncle point. When I violate the cardinal rule not to violate a stop, then I want an uncle point or a fail-safe point, or and I write that down next to my buy point in my journal, and that's where I'm out, regardless of what's going on.
Okay, so here's a question I'm going to answer, which is from Vasil. Why don't you spoon feed us some trades to make us some money so we pay you? Before I pay any money, you got to help me make that money. All right, we agree. We're on the same page. We don't want you to pay a lot before we prove anything. That's why this deal is just $47.50. If Jeff can't make you any money, just cancel it. We can't legally make you pay any more than that if you don't want it. So pretty much that. This deal, it's practically free. If you don't want it, no big deal. Okay, so let's see. So what time frames are your trades on?
Everything revolves around the daily chart. That's where I start. And then I pull back the lens to look at the weeklies. And then once I'm in a position, I'm looking at the 10-minute and the hourly, and I'm keying off once I'm in a position to manage it, I'm keying off the 50 period on the hourlies and the 20 period on the hourlies, because that same holy grail setup that we walked through on the dailies, the pullback or the snapback to the 20 period, that on the dailies, that also comes into play on the hourlies. I find those very helpful.
Okay, so what's the mix between longs and shorts, would you say?
Up until the last 3 weeks or so, I would have said it would have been probably 50-50 in the nightly report. But with the runaway move in IWM and in the techs and retailers, it's been stacked almost, I'd say, five. They're typically 5 or 6 setups every day, and the majority of them been to the long side.
Okay, so we're always getting questions from people who ask about options. Are you doing anything with options, and is there, or maybe a better way to say it is there anything you do that really helps options traders?
Well, we have day trades, swing trades, and the swing trades lend themselves to options. Some of the swing trades, they're typically 3 days to 7 days long, but we also zero down on the special situations, which are big picture setups. And we've had some of those in the miners. About a month ago, we put a trade in on AG, which is a silver miner, around $6. We sold half the position at around $7.40, $7.50, and we're still riding after it. I personally own November calls in AG. So yeah, a lot of the special situations lend themselves very nicely to options, as do some of the swing setups.
Okay, now the technicals that you teach in the video course, and again, everybody go to t3live.com/deal, and for just $47.50, you get everything you see on the screen the hardcover book, real hardcover book, not an ebook, not a PDF, 30 Days of the Daily Market Report newsletter, and the Hit and Run 2.0 video course. $374 total value, just $47.50 for everything. Cancel it anytime. Okay, so the technical strategies you teach, do they also work for like Forex and futures and other instruments like that, or is it just stocks and ETFs?
I learned that from W.D. Gann, the same natural structures in the market that work in commodities work in stocks. Gann wrote a book called How to Make Profits in Commodities. And I learned that once I read that book for the second, third time, that the same rules are applicable to stocks, to gold, to oil, anything that's tradable. They follow the same rules, and the reason being that the people, we're all the same. They're human beings that are trading these, and we all have the same emotions.
Okay. Do you use any indicators?
Everything I do is based on time and price. They're the point of the sword. Time, price, and pattern. In my experience, indicators are more descriptive than they are predictive. And of course, all indicators are derived from time, price, and time, price, or volume. So I figure, why not go right to the horse's mouth, and that's time and price.
Okay, so why time? Because I think that's one of the things that you do that's really different, is that you place a lot of value on time. So, like, how does analyzing time play into your process?
Well, it's a good question. I learned that again through W.D. Gann's work, and I was intrigued by his constant repetition that time was more important than price. So I figured I would learn by reading as much as I could about the nature of cycles, and follow some people who had done a lot of work on cycles, such as Peter Leides back in the day, and I found it fascinating. The same Fibonacci time expansions that work in price work in time. And I found that Gann's use of the 20 and the 30 and the 60 and 90-year cycles, all fractals of each other, all harmonics, I should say, of each other, really do a good job of identifying big picture trend changes.
Okay, just a reminder, we're running out of time. So again, can't emphasize how cool this deal is. It's just $47.50. You get the Hit and Run Trading, the hardcover book, not a PDF, not an ebook, 30 Days of the Daily Market Report newsletter, and the Hit and Run 2.0 training course for just $47.50. That's a total value of $374. So I suggest you get in. You'll be getting more email alerts from Jeff this afternoon. You'll get the nightly stock report tonight. So that means that's for ideas tomorrow. So you can get to work right away. Okay, so guys, we're going to wrap up soon. So again, t3live.com/deal. So we're going to have a final round of questions. So what is on everybody's mind? Okay, do you use ETFs in the Daily Market Report newsletter?
I do. I do look at ETFs. We had a trade recently in XOP, or at the very least, we keyed off of XOP recently, the oil and gas exploration ETF, in order to drill down to stocks like WHD, which we showed that we bought. So we'll either trade the ETF itself or key off the action, such as SMH, the semiconductor ETF, to find the leading stock, and then go to the leading stock, I should say, in the sector, in the group.
Okay, guys. Okay, that's gonna wrap us up. Again, Jeff, thanks for coming out today. That brings us right up to 1 o'clock, which is our end time.
Yeah, Mike. Let me finish up with just one thing, if I may.
Yep, sure.
Because this is important. I sucked when I started, but I knew one thing, and that's that I didn't need to be great to get started, but I needed to get started to be great. So everybody needs a coach. Four eyes, it's a trite comment, but four eyes are better than two. So, the best singers, the best tennis players, the best in their fields, they even have a coach. So I had coaches, and I knew that much when I started to go out there and read as much as I could, but more important to create a dialogue with somebody who had been doing it for years. And I can't stress the importance enough of, whether it's me or somebody else, going out there and getting a dialogue going with someone who's been through the battles.
All right. Thank you, Jeff. All right, I think that's a great line. Everybody should remember, I didn't need to be great to get started, but I needed to get started to be great. And again, no better time to get started like the present. It's just $47.50 for hardcover book, 30 days of the Daily Market Report newsletter. So you're going to get literally hundreds of trading ideas over the next month. And then you can evaluate whether you want to stay on or not. And the Hit and Run 2.0 video course, valued at $195, $374 total value, just $47.50 for everything. Go to t3live.com/deal. Again, t3live.com/deal. And Jeff, thanks a lot for your time. Thanks for coming out today.
Thanks, everybody, for listening. Appreciate your time.